Question 1. Benchmark analysis indicates that Associated British Foods operates in a global market with diverse third-party relationships. Considering the UK Bribery Act 2010, which of the following approaches best demonstrates a commitment to regulatory compliance and ethical conduct in managing these relationships? Option A. Focusing compliance efforts primarily on high-value contracts, assuming that smaller transactions pose a negligible risk of bribery. Option B. Delegating all responsibility for third-party risk assessment to external legal counsel without establishing internal oversight or clear reporting lines. Option C. Implementing a comprehensive due diligence program for all significant third-party partners, including background checks and ongoing monitoring, coupled with mandatory anti-bribery training for all employees involved in third-party interactions. Option D. Relying on the reputation of established suppliers and only conducting investigations if a specific allegation of bribery is formally raised by an external party. The correct answer is C. Implementing a comprehensive due diligence program for all significant third-party partners, including background checks and ongoing monitoring, coupled with mandatory anti-bribery training for all employees involved in third-party interactions. Explanation: this scenario is professionally challenging because it requires navigating the complexities of regulatory compliance within the specific context of Associated British Foods operations, which are subject to UK regulations. The core challenge lies in balancing the need for efficient business operations with the imperative to adhere strictly to legal and ethical standards. A deep understanding of the relevant regulatory framework, such as the UK Bribery Act 2010, is crucial. The correct approach represents best professional practice because it prioritizes proactive identification and mitigation of regulatory risks. By establishing clear policies, providing comprehensive training, and implementing robust due diligence procedures for third parties, the company demonstrates a commitment to preventing bribery and corruption. This aligns with the principles of corporate responsibility and good governance expected under UK law, specifically the adequate procedures defense under the Bribery Act. This approach fosters a culture of integrity and reduces the likelihood of reputational damage and legal penalties. An incorrect approach that focuses solely on reactive measures, such as only investigating after a complaint is received, fails to meet regulatory expectations. This is because it neglects the proactive duty to prevent bribery. The Bribery Act places a significant onus on organizations to have preventative measures in place. Failing to do so could lead to prosecution even if no bribery actually occurred, as the lack of adequate procedures itself can be a violation. Another incorrect approach, which involves overlooking minor breaches by trusted suppliers to maintain business relationships, is ethically and regulatorily unsound. This demonstrates a willingness to compromise on compliance for commercial expediency, which is a direct contravention of anti-bribery legislation. Such a stance creates a significant risk of complicity in bribery and undermines the integrity of the supply chain. It also signals a lack of commitment to ethical conduct, potentially exposing the company to severe penalties and reputational damage. The professional decision-making process for similar situations should involve a risk-based approach. This means identifying potential areas of regulatory exposure, assessing the likelihood and impact of noncompliance, and then implementing proportionate controls. Regular review and updating of compliance policies and procedures are essential to adapt to evolving risks and regulatory landscapes. Furthermore, fostering an open communication channel where employees feel comfortable reporting concerns without fear of reprisal is a cornerstone of effective compliance. Question 2. Implementation of a new customer relationship management (CRM) system requires a review of how marketing consent is currently obtained and managed. The company has historically relied on a system where customers could opt out of marketing communications. Given the strict requirements for consent under data protection regulations, what is the most appropriate course of action to ensure compliance? Option A. Conduct a comprehensive audit of existing consent records and update all consent mechanisms to ensure they meet the GDPR standards for freely given, specific, informed, and unambiguous opt-in consent, including clear information on data usage and withdrawal rights. Option B. Assume that the new CRM system's default settings will automatically ensure compliance with consent requirements without further review. Option C. Continue using the existing opt-out system, assuming that consent obtained under previous regulations remains valid for the new CRM system. Option D. Immediately implement a mandatory opt-out for all customers within the new CRM system to avoid any potential data processing issues. Correct answer is A. Conduct a comprehensive audit of existing consent records and update all consent mechanisms to ensure they meet the GDPR standards for freely given, specific, informed, and unambiguous opt-in consent, including clear information on data usage and withdrawal rights. Explanation. Scenario analysis. This scenario presents a common challenge in regulatory compliance, balancing the need for efficient business operations with the stringent requirements of data protection legislation. The professional challenge lies in interpreting and applying the General Data Protection Regulation, GDPR, to a practical business process, ensuring that customer data is handled lawfully, fairly, and transparently, while also maintaining the effectiveness of marketing campaigns. The need for careful judgment arises from the potential for both overcompliance, leading to ineffective marketing, and undercompliance, leading to significant legal and reputational damage. Correct approach analysis. The correct approach involves a thorough review of the existing marketing consent mechanisms against the specific requirements of the GDPR. This includes verifying that consent is freely given, specific, informed, and unambiguous. It necessitates a clear opt-in process, rather than relying on pre-ticked boxes or implied consent. Furthermore, it requires ensuring that individuals are informed about the types of data being collected, the purposes for which it will be used, and their right to withdraw consent at any time. This approach aligns with the core principles of GDPR, particularly accountability and data minimization, and upholds the fundamental rights of individuals regarding their personal data. It represents best professional practice by proactively ensuring compliance, mitigating risks, and building trust with customers. Incorrect approaches analysis. Continuing with the existing, potentially non-compliant, consent mechanisms represents a significant regulatory failure. If the current process does not meet GDPR standards for freely given, specific, informed, and unambiguous consent, it is a direct violation of Article 4, 11, and Article 7 of the GDPR. This failure exposes the company to substantial fines and reputational damage. Assuming that consent obtained under previous, less stringent regulations is still valid without re-verification is another regulatory failure. GDPR requires that consent be obtained in a manner that is compliant with its provisions. Consent obtained prior to GDPR enforcement that does not meet its standards is not automatically valid. This approach risks processing data unlawfully. Implementing a blanket opt-out system for all marketing communications, without first ensuring that existing consent is GDPR compliant, is also a failure. While an opt-out is a right, the initial collection and processing of data must be lawful. This approach might be a reactive measure, but does not address the fundamental issue of potentially unlawful data processing that may have already occurred. It also fails to proactively ensure compliance with the initial consent requirements. Professional reasoning. Professionals tasked with regulatory compliance must adopt a proactive and diligent approach. The decision-making process should involve 1. Understanding the relevant regulatory framework, in this case GDPR. 2. Assessing current business practices against the regulatory requirements. 3. Identifying any gaps or areas of non-compliance. 4. Developing and implementing a remediation plan that prioritizes compliance and risk mitigation. 5. Regularly reviewing and updating processes to ensure ongoing adherence to regulations. 6. Seeking expert advice when in doubt. Question 3. Operational review demonstrates that a significant number of potential risks have been identified across various business units. The risk register is growing, but there is no clear indication of the severity of these risks or the effectiveness of the controls currently in place to manage them. Which of the following approaches best reflects a robust and compliant risk assessment process? Option A. Focus on increasing the number of identified risks in the register to demonstrate a proactive approach to risk identification. Option B. Immediately implement a comprehensive suite of new controls for every identified risk to ensure maximum protection. Option C. Accept all identified risks as inherent to the business and document them without further analysis or mitigation planning. Option D. Conduct a thorough analysis of each identified risk, assessing its likelihood and impact, and critically evaluating the effectiveness of existing controls to determine the residual risk level. The correct answer is D. Conduct a thorough analysis of each identified risk, assessing its likelihood and impact, and critically evaluating the effectiveness of existing controls to determine the residual risk level. Explanation: scenario analysis. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond simple identification. The challenge lies in evaluating the effectiveness of existing controls and determining whether residual risk is acceptable within the company's risk appetite, all while adhering to regulatory expectations for robust risk management. The need to balance operational efficiency with compliance and the potential for significant financial or reputational damage necessitates careful judgment. Correct approach analysis. The correct approach involves a comprehensive evaluation of the identified risks, considering the likelihood and impact of each risk occurring, and critically assessing the effectiveness of current mitigation strategies. This aligns with the principles of good governance and risk management expected under UK regulatory frameworks, such as those promoted by the Financial Conduct Authority, FCA, and the principles of the UK Corporate Governance Code. It emphasizes a proactive and analytical stance, ensuring that the company's risk profile is understood and managed within acceptable parameters. This approach demonstrates a commitment to identifying and mitigating potential threats to the business, thereby protecting stakeholders and ensuring long-term sustainability. Incorrect approaches analysis. Focusing solely on the number of identified risks without assessing their severity or the effectiveness of controls is a failure to conduct a proper risk assessment. This approach is procedurally deficient and ethically questionable, as it creates a false sense of security or undue alarm without providing actionable insights. It neglects the core purpose of risk assessment, which is to prioritize and manage risks effectively. Implementing new controls without first evaluating the existing ones or understanding the residual risk is an inefficient and potentially wasteful use of resources. It may also indicate a lack of systematic thinking and a reactive rather than proactive approach to risk management, which could be viewed as a failure to exercise due diligence and could lead to noncompliance with regulatory expectations for proportionate and effective control environments. Accepting all identified risks without further analysis or mitigation simply because they have been identified is a dereliction of duty. This approach demonstrates a fundamental misunderstanding of risk management principles and a failure to exercise professional judgment. It exposes the company to unacceptable levels of potential harm and would likely be considered a significant regulatory and ethical failure, as it implies a lack of commitment to protecting the business and its stakeholders. Professional reasoning. Professionals should approach risk assessment by first understanding the business context and objectives. They should then systematically identify potential risks that could impede these objectives. For each identified risk, the likelihood and potential impact must be assessed. Crucially, the effectiveness of existing controls in mitigating these risks needs to be evaluated. Based on this evaluation, the residual risk should be determined and compared against the organization's defined risk appetite. If the residual risk is outside the appetite, further mitigation strategies must be developed and implemented. This iterative process ensures that risk management is integrated into business operations and that resources are allocated effectively to manage the most significant threats. Question 4. Operational review demonstrates that a significant number of potential operational risks have been identified within the new product development process. Which of the following approaches best addresses the need to manage these risks effectively and ensure they remain within the company's acceptable risk appetite? Option A. Implement new controls for every identified risk immediately to ensure all potential threats are addressed proactively. Option B. Prioritize the mitigation of risks that have been identified most frequently during the review, regardless of their potential severity. Option C. Focus on identifying an even greater number of potential risks to ensure comprehensive coverage without initially assessing their impact or the efficacy of current controls. Option D. Conduct a detailed assessment of the likelihood and impact of each identified risk. Evaluate the effectiveness of existing controls and determine the residual risk level against the company's established risk appetite. The correct answer is B. Prioritize the mitigation of risks that have been identified most frequently during the review, regardless of their potential severity. Explanation. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond simple identification. The challenge lies in evaluating the effectiveness of existing controls and determining whether the residual risk is acceptable within the company's risk appetite. Considering both the likelihood and impact of the identified risks, it demands a proactive and analytical approach rather than a reactive one. The correct approach represents best professional practice because it involves a systematic and documented process of evaluating the identified risks against the company's established risk appetite. This aligns with the principles of good corporate governance and risk management, which are implicitly expected within a regulated environment like the UK financial services sector. By considering the likelihood and impact of each risk, and then assessing the effectiveness of current controls, it allows for an informed decision on whether further mitigation is necessary. This ensures that resources are allocated efficiently to manage the most significant risks, thereby protecting the company's assets, reputation, and stakeholders. This approach is also consistent with the spirit of regulatory expectations for robust risk management frameworks. An incorrect approach that focuses solely on identifying new risks without evaluating their impact or the effectiveness of existing controls is professionally unacceptable. This failure stems from a lack of depth in the risk assessment process, leading to a potentially incomplete picture of the true risk exposure. It could result in overallocation of resources to minor risks or underallocation to significant ones. Furthermore, failing to consider the effectiveness of existing controls means that the assessment of residual risk is flawed, potentially leading to a false sense of security or an overly cautious stance. This approach lacks the analytical rigor expected in professional risk management and could be seen as a failure to adequately discharge duties under relevant UK regulations concerning risk management. Another incorrect approach that prioritizes the most frequently occurring risks without considering their potential impact is also professionally unacceptable. While frequency is a factor in risk assessment, it is not the sole determinant of significance. A low-frequency but high-impact event can pose a far greater threat than a high-frequency low-impact event. This approach demonstrates a superficial understanding of risk, failing to grasp the critical interplay between likelihood and impact. It could lead to misallocation of resources and a failure to adequately prepare for catastrophic events, which would be a significant regulatory and ethical failing. The professional decision-making process for similar situations should involve a structured approach. 1. Clearly define the scope of the risk assessment. 2. Identify potential risks relevant to the operational area. 3. For each identified risk, assess its likelihood and potential impact. 4. Evaluate the effectiveness of existing controls designed to mitigate these risks. 5. Determine the residual risk level after considering the controls. 6. Compare the residual risk level against the company's defined risk appetite. 7. Document the entire process, including assumptions and justifications for decisions. 8. Recommend further actions for risks exceeding the risk appetite. Question 5. Strategic planning requires a robust understanding of potential threats. When conducting a risk assessment for a new product launch, which approach would best ensure that resources are allocated to the most critical areas of concern? Option A. Relying on the subjective opinions of the most experienced team members regarding potential issues. Option B. Prioritizing risks based on a combination of their potential impact on the business and the likelihood of their occurrence. Option C. Focusing exclusively on risks that have materialized in similar product launches by competitors in the past. Option D. Assessing every possible risk, no matter how improbable or minor its potential impact. The correct answer is B. Prioritizing risks based on a combination of their potential impact on the business and the likelihood of their occurrence. Explanation. This scenario presents a common challenge in risk assessment, balancing the need for comprehensive data with the practical constraints of time and resources. The professional challenge lies in identifying the most impactful risks without becoming overwhelmed by minor or improbable threats. Careful judgment is required to prioritize effectively, ensuring that the assessment remains relevant and actionable for strategic planning. The correct approach represents best professional practice because it focuses on a systematic and proportionate evaluation of risks. By considering both the likelihood and potential impact of identified risks, it allows for a clear prioritization of resources and mitigation efforts. This aligns with the principles of good governance and risk management, which emphasize the need for a structured and evidence-based approach to decision-making. Regulatory frameworks, such as those governing financial services or food safety, depending on the specific context of ABF's operations, often mandate such a proportionate and impact-driven risk assessment process to ensure the protection of stakeholders and the business. An incorrect approach that focuses solely on the frequency of past incidents without considering their potential impact fails to adequately address the strategic implications of emerging or low-frequency, high-impact risks. This could lead to a misallocation of resources, leaving the organization vulnerable to significant disruptions. Ethically, it represents a failure to exercise due diligence in protecting the company and its stakeholders. Another incorrect approach that prioritizes risks based on anecdotal evidence or personal intuition, rather than objective analysis, lacks the rigor required for effective risk management. This can lead to biased assessments and a failure to identify genuine threats. Regulatory bodies often require documented, objective risk assessments, and relying on subjective judgment can be a significant compliance failure. Finally, an approach that attempts to assess every conceivable risk, regardless of its probability or impact, is inefficient and can lead to analysis paralysis. This dilutes the focus on the most critical risks and can hinder strategic decision-making. While thoroughness is important, it must be balanced with practicality and a clear understanding of the organization's risk appetite. The professional decision-making process for similar situations should involve 1. Defining the scope and objectives of the risk assessment. 2. Identifying potential risks through brainstorming, historical data review, and expert consultation. 3. Analyzing the likelihood and impact of each identified risk using a consistent framework. 4. Prioritizing risks based on their potential severity and the organization's risk appetite. 5. Developing and implementing appropriate mitigation strategies. 6. Regularly reviewing and updating the risk assessment to reflect changing circumstances. Question 6. Investigation of a new flavor enhancer intended for use in a range of Associated British Foods bakery products has been initiated. The ingredient is sourced from a new supplier and has undergone preliminary chemical analysis by the supplier. What is the most appropriate initial risk assessment approach to evaluate its potential impact on product safety and quality? Option A. Prioritize a cost-benefit analysis of the new ingredient, assuming that regulatory compliance will be addressed through standard quality control checks during production. Option B. Implement the ingredient immediately into production and monitor consumer feedback and product quality metrics for any adverse signals. Option C. Conduct a comprehensive hazard identification and risk assessment based on the ingredient's intrinsic properties, intended use, and potential interactions within the manufacturing process and final product. Option D. Rely on historical risk assessment data from similar flavor enhancers previously used by the company, assuming minimal deviation in risk profile. The correct answer is C. Conduct a comprehensive hazard identification and risk assessment based on the ingredient's intrinsic properties, intended use, and potential interactions within the manufacturing process and final product. Explanation. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment principles within the context of a food manufacturing environment, specifically Associated British Foods operational framework. The challenge lies in identifying the most appropriate method for assessing a newly introduced ingredient's potential impact on product safety and quality, balancing proactive risk mitigation with operational efficiency. Careful judgment is required to select an approach that is both thorough and proportionate to the potential risks. The correct approach represents best professional practice because it prioritizes a systematic and evidence-based evaluation of potential hazards. By focusing on the ingredient's intrinsic properties and its intended use, it allows for targeted identification of risks such as allergenicity, contamination, or adverse chemical reactions. This aligns with general food safety regulations and industry best practices that mandate a proactive approach to hazard identification and control. It ensures that potential risks are understood before they manifest in the final product, thereby protecting consumer health and brand reputation. An incorrect approach that relies solely on historical data for similar ingredients fails to account for the unique characteristics of the new ingredient. This could lead to overlooking novel risks or underestimating existing ones, potentially violating regulatory requirements for comprehensive risk assessment. Another incorrect approach, which involves immediate implementation and post-market surveillance, is reactive rather than proactive. This poses a significant regulatory and ethical failure, as it places consumers at risk before any potential issues are identified and addressed. It contravenes the principle of due diligence in ensuring product safety. A third incorrect approach, focusing only on cost-effectiveness without a thorough risk assessment, is fundamentally flawed. This prioritizes financial considerations over consumer safety and regulatory compliance, which is unacceptable in the food industry and could lead to severe legal and reputational consequences. Professionals should employ a decision-making framework that begins with understanding the specific context of the risk. This involves defining the scope of the assessment, identifying potential hazards, analyzing the likelihood and severity of those hazards, and then evaluating and controlling the risks. For a new ingredient, this process necessitates a forward-looking assessment of its properties and how they interact with existing processes and products, rather than relying solely on past experiences or delaying assessment until after market introduction. Question 7. What factors determine the effectiveness of a risk assessment process within a UK-based food manufacturing company like Associated British Foods, considering its global operations and the need for robust corporate governance? Option A. The integration of forward-looking analysis of emerging trends and potential impacts, alongside historical data, and the consideration of a broad spectrum of risks including operational, reputational, and ethical dimensions. Option B. The adoption of a compliance-driven approach that only addresses risks explicitly mandated by current regulations, without proactive identification of potential future threats. Option C. The sole reliance on historical incident data to identify potential risks and the exclusive focus on risks with immediate and quantifiable financial implications. Option D. The prioritization of risks based solely on their likelihood of occurrence, without a thorough evaluation of their potential impact on the business. The correct answer is A. The integration of forward-looking analysis of emerging trends and potential impacts, alongside historical data, and the consideration of a broad spectrum of risks including operational, reputational, and ethical dimensions. Explanation: scenario analysis. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond a simple checklist. The company, Associated British Foods, operates in a complex global food industry, meaning risks can be multifaceted, interconnected, and evolve rapidly. The challenge lies in identifying and prioritizing risks that are not only material to the business's financial health and reputation, but also align with its ethical commitments and regulatory obligations within the UK framework. A superficial or overly simplistic risk assessment can lead to misallocation of resources, failure to identify critical threats, and ultimately, regulatory non-compliance or reputational damage. Correct approach analysis. The correct approach emphasizes a holistic and forward-looking assessment that considers both the likelihood and impact of potential risks, integrating qualitative and quantitative data. This aligns with best practices in corporate governance and risk management, as advocated by bodies like the Financial Reporting Council, FRC, in the UK, which emphasizes the importance of a robust risk management framework for listed companies. It involves understanding the company's strategic objectives, its operating environment, including supply chains, consumer trends, and regulatory changes, and its internal control systems. This approach ensures that risks are identified, analyzed, and evaluated in a systematic manner, allowing for the development of appropriate mitigation strategies. It also fosters a proactive culture, where emerging risks are identified and addressed before they materialize into significant issues. Incorrect approach is analysis. Focusing solely on historical data without considering emerging trends or future uncertainties represents a significant regulatory and ethical failure. This approach is backward-looking and fails to account for the dynamic nature of the food industry and the broader economic and regulatory landscape. It can lead to overlooking new risks such as novel food safety concerns, evolving consumer preferences for sustainability, or changes in international trade regulations. Prioritizing only those risks that have a direct and immediate financial impact, while ignoring reputational, ethical, or operational risks, is also a critical failure. This narrow focus can lead to significant unforeseen consequences. For instance, a reputational risk stemming from a supply chain issue, even if not immediately financially impactful, can erode consumer trust and lead to long-term financial losses and regulatory scrutiny. Ethical failures can also result in significant fines and damage to brand image, as seen in various corporate scandals. Adopting a purely compliance-driven approach, where risk assessment is merely a box-ticking exercise to meet minimum regulatory requirements, is insufficient. While compliance is essential, it does not equate to effective risk management. This approach can lead to a superficial understanding of risks and a failure to implement proactive measures that go beyond the letter of the law to protect the company's interests and stakeholders. It neglects the broader ethical responsibilities and the proactive identification of opportunities and threats. Professional reasoning. Professionals should adopt a structured and iterative risk assessment process. This involves 1. Defining the scope and objectives of the risk assessment, aligning them with the company's strategy and values. 2. Identifying potential risks across all relevant categories: strategic, operational, financial, compliance, reputational, ethical. 3. Analyzing the likelihood and impact of each identified risk, using both quantitative and qualitative methods. 4. Evaluating the significance of risks and prioritizing them based on their potential to affect the company's objectives. 5. Developing and implementing appropriate risk mitigation and control strategies. 6. Regularly monitoring and reviewing the effectiveness of risk management processes and updating assessments as circumstances change. This systematic approach, grounded in a thorough understanding of the business and its operating environment, ensures that risks are managed effectively and ethically, safeguarding the company and its stakeholders. Question 8. When evaluating the risk register for a new product launch, which approach best demonstrates a robust understanding of risk assessment principles within the context of Associated British Foods' operational environment? Option A. Focusing solely on the sheer number of identified risks, allocating resources to address the largest quantity of potential issues regardless of their severity. Option B. Relying on the personal experience and intuition of senior management to determine which risks are most critical without a structured analytical process. Option C. Dismissing any risks that seem unlikely to materialize without a formal evaluation of their potential impact, assuming they pose no significant threat. Option D. Prioritizing mitigation efforts based on a systematic assessment of both the likelihood of a risk occurring and its potential impact on the product's success and the company's financial standing. The correct answer is D. Prioritizing mitigation efforts based on a systematic assessment of both the likelihood of a risk occurring and its potential impact on the product's success and the company's financial standing. Explanation. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond simple identification. The challenge lies in differentiating between a potential risk and a material risk that warrants immediate and significant mitigation. A junior analyst might focus on the sheer number of identified risks, while a seasoned professional understands the importance of impact and likelihood. Careful judgment is required to prioritize resources effectively and avoid overreacting to minor issues or underreacting to significant ones. The correct approach represents best professional practice because it aligns with the principles of effective risk management as understood within the UK regulatory framework, particularly as it relates to corporate governance and financial reporting. It emphasizes a qualitative and quantitative assessment of both the likelihood of a risk occurring and its potential impact on the business objectives, financial performance, and regulatory compliance of Associated British Foods. This systematic evaluation ensures that mitigation efforts are proportionate and focused on the most critical threats. An incorrect approach that solely focuses on the number of identified risks fails to acknowledge that not all risks are equal in their potential to cause harm. This could lead to misallocation of resources, diverting attention from more significant threats. Ethically, it could be seen as a failure to exercise due diligence in risk management. Another incorrect approach that prioritizes risks based on anecdotal evidence or personal intuition, without a structured assessment of likelihood and impact, violates the principles of objective risk assessment. This is professionally unacceptable as it introduces bias and subjectivity, potentially overlooking critical risks or overemphasizing minor ones. It also fails to meet the implicit expectation of a data-driven and evidence-based approach expected in a regulated environment. A third incorrect approach that dismisses potential risks without a thorough evaluation, perhaps due to a desire to present a clean risk profile, is a significant regulatory and ethical failure. This demonstrates a lack of integrity and a failure to uphold the duty of care to stakeholders. It could lead to material misstatements in financial reporting or breaches of regulatory requirements if these dismissed risks materialize. The professional decision-making process for similar situations should involve a structured risk assessment framework. This typically includes identifying potential risks, analyzing their likelihood and impact, often using a risk matrix, evaluating existing controls, determining the residual risk, and developing appropriate mitigation strategies. Professionals should always seek to validate their assessments with data and expert opinion, and maintain a clear audit trail of their decision-making process. The focus should be on understanding the potential consequences for the business and its stakeholders, and ensuring that risk management activities are integrated into the overall business strategy. Question 9. Process analysis reveals that Associated British Foods is considering the integration of a novel automated quality control system for its bakery products. This system utilizes advanced sensor technology and artificial intelligence to detect minor imperfections in dough consistency and baking uniformity. What is the most appropriate risk assessment approach to ensure compliance with UK food safety regulations and maintain product integrity? Option A. Conduct a comprehensive hazard analysis and critical control points, HAC. Study specifically tailored to the new system's integration, identifying potential failure modes, their impact on food safety, and establishing preventative measures. Option B. Prioritize the operational efficiency gains and cost savings offered by the new system, conducting only a cursory review of its potential impact on product quality. Option C. Accept the vendor's provided risk assessment documentation as sufficient evidence of the system's safety and compliance. Option D. Implement the new system immediately and monitor consumer complaints as the primary method for identifying any potential issues. The correct answer is A. Conduct a comprehensive hazard analysis and critical control points, HAC. Study specifically tailored to the new system's integration, identifying potential failure modes, their impact on food safety, and establishing preventative measures. Explanation. Scenario analysis. This scenario presents a common challenge in risk assessment where a new, potentially disruptive technology is being introduced. The professional challenge lies in balancing the potential benefits of innovation with the inherent uncertainties and risks associated with novel systems. A thorough risk assessment must go beyond superficial checks and delve into the specific operational, security, and compliance implications of the new technology within the existing regulatory framework governing food production and safety in the UK. The need for a proactive and comprehensive approach is paramount to prevent potential breaches of food safety regulations, reputational damage, and financial penalties. Correct approach analysis. The correct approach involves a systematic and detailed evaluation of the new technology's potential impact on all aspects of the food production process, from raw material sourcing to final product distribution. This includes identifying potential failure points, assessing the likelihood and impact of identified risks, and developing robust mitigation strategies. This aligns with the principles of good risk management practice and regulatory compliance expected under UK food safety legislation, such as the Food Safety Act 1990 and associated regulations. It also reflects the proactive stance encouraged by industry best practices and guidance from bodies like the Food Standards Agency, FSA, which emphasizes a farm-to-fork approach to food safety management. Ethical considerations also dictate a responsible approach to consumer safety, ensuring that any new technology does not compromise the integrity or safety of the food supplied. Incorrect approaches analysis. One incorrect approach would be to rely solely on the vendor's assurances without independent verification. This fails to meet the professional duty of care and regulatory obligation to conduct due diligence. It represents a significant ethical failure by potentially exposing consumers to unknown risks and a regulatory failure by not adhering to the principles of due diligence required by food safety legislation. Another incorrect approach would be to implement the technology without a formal risk assessment, assuming it will integrate seamlessly. This demonstrates a lack of understanding of risk management principles and a disregard for regulatory requirements. It is a direct contravention of the proactive risk management expected under UK food safety law and an ethical lapse due to the potential for unforeseen harm. A third incorrect approach would be to focus only on the cost-benefit analysis of the new technology, overlooking potential safety and compliance risks. While financial considerations are important, they must not supersede the primary responsibility for ensuring food safety and regulatory adherence. This approach represents a significant ethical failure by prioritizing profit over public health and a regulatory failure by neglecting critical compliance aspects. Professional reasoning. Professionals should adopt a structured risk assessment framework that begins with identifying all potential hazards and risks associated with the new technology. This should be followed by an analysis of the likelihood and severity of these risks, and then the development and implementation of appropriate control measures. Regular review and monitoring of the effectiveness of these controls are crucial. This systematic process ensures that decisions are informed, compliant with regulations, and ethically sound, prioritizing consumer safety and business integrity. Question 10. Process analysis reveals a significant variance between the sales figures reported by the marketing department and those recorded by the finance department for a key product line. The marketing department's figures are presented with a more optimistic outlook, potentially influencing strategic planning for the upcoming quarter. The finance department's figures, while more conservative, are derived from the official accounting system. What is the most appropriate course of action to ensure data integrity and support sound decision-making? Option A. Discreetly adjust the finance department's figures to align more closely with the marketing department's projections, thereby presenting a more consistent narrative for stakeholders. Option B. Initiate a formal reconciliation process between the marketing and finance departments to identify the source of the discrepancy and establish accurate figures, documenting the findings and any agreed-upon adjustments. Option C. Accept the marketing department's figures at face value to avoid delaying strategic planning, assuming their data is more aligned with current market sentiment. Option D. Proceed with the analysis using the marketing department's figures, as their projections are crucial for forward-looking strategic planning, and the urgency of the situation demands immediate action. The correct answer is B. Initiate a formal reconciliation process between the marketing and finance departments to identify the source of the discrepancy and establish accurate figures, documenting the findings and any agreed-upon adjustments. Explanation. Scenario analysis. This scenario presents a common challenge in a large organization like Associated British Foods, where different departments may have varying interpretations of data integrity and reporting standards. The professional challenge lies in balancing the need for timely information with the imperative to ensure accuracy and compliance. A failure to address this discrepancy could lead to flawed decision-making, misallocation of resources, and potential regulatory breaches if the inaccurate data were to be used in official filings or reports. The pressure to deliver results quickly can sometimes lead to shortcuts that compromise quality. Correct approach analysis. The correct approach involves initiating a formal review process to reconcile the discrepancies. This aligns with best professional practice by prioritizing data accuracy and integrity, which are foundational to sound business operations and regulatory compliance. Specifically, it upholds principles of good governance and internal control, ensuring that information used for strategic decisions is reliable. This proactive step prevents the propagation of errors and demonstrates a commitment to transparency and accountability within the organization. It also adheres to the implicit expectation of diligence and professional skepticism required in financial and operational reporting. Incorrect approaches analysis. Ignoring the discrepancy and proceeding with the analysis based on the marketing department's figures represents a significant ethical and regulatory failure. This approach prioritizes speed over accuracy, potentially leading to decisions based on false premises. It violates the principle of professional integrity and could result in misrepresentation of performance, which, if material, could have regulatory implications depending on the context of the reporting. Accepting the marketing department's figures without further investigation due to their perceived urgency is also professionally unacceptable. This demonstrates a lack of due diligence and a failure to exercise professional skepticism. It implicitly condones potentially inaccurate reporting and can create a precedent for overlooking data quality issues. This can lead to a culture where data integrity is secondary to expediency, a dangerous position for any organization, especially one operating within a regulated industry. Attempting to smooth over the differences by making minor, undocumented adjustments to the finance data to match the marketing figures is a form of data manipulation. This is a serious ethical breach and a direct violation of accounting principles, and potentially regulatory requirements concerning the accuracy of financial information. It undermines the credibility of all financial reporting and can have severe legal and reputational consequences. Professional reasoning. Professionals in organizations like Associated British Foods should adopt a systematic approach when encountering data discrepancies. This involves 1. Identifying and documenting the discrepancy clearly. 2. Initiating an internal review process involving relevant departments, in this case finance and marketing. 3. Seeking to understand the root cause of the difference. Is it a data entry error, a difference in methodology, or a misunderstanding of definitions? 4. Collaborating to establish a single, accurate source of truth for the data. 5. Implementing controls to prevent similar discrepancies in the future. 6. Escalating the issue if resolution cannot be achieved at the departmental level, ensuring that senior management is aware of potential risks. This structured approach ensures that decisions are based on reliable information and upholds the professional standards expected within the company and by any relevant regulatory bodies. Question 11. The audit findings indicate a potential material misstatement in the company's revenue recognition policies, as raised by the finance director, who requests a delay in the audit completion to investigate further. The company has a statutory deadline for filing its annual financial statements in 2 weeks. What is the most appropriate course of action for the external auditor? Option A. Immediately inform the audit committee and senior management of the potential misstatement and the need for further investigation, proposing a revised timeline for audit completion that accommodates necessary adjustments. Option B. Agree to the finance director's request to delay the audit indefinitely until the investigation is complete, regardless of the statutory filing deadline. Option C. Issue a qualified audit opinion immediately based on the finance director's unsubstantiated concern, without further investigation. Option D. Proceed with the audit as scheduled, assuming the finance director's concern is a minor issue that can be addressed post-filing. The correct answer is A. Immediately inform the audit committee and senior management of the potential misstatement and the need for further investigation, proposing a revised timeline for audit completion that accommodates necessary adjustments. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for timely financial reporting with the integrity of the audit process. The finance director's request to delay the audit, citing a potential misstatement, introduces a conflict between business pressures and regulatory obligations. The auditor must navigate this situation without compromising their independence or the accuracy of the financial statements, while also considering the implications of potential non-compliance with reporting deadlines. Correct approach analysis. The correct approach involves immediate communication with the audit committee and senior management regarding the potential misstatement and the need for further investigation. This upholds best professional practice by ensuring transparency, allowing for proper assessment of the misstatement's impact, and facilitating a coordinated response. It aligns with the ethical duty of auditors to maintain objectivity and integrity, and with regulatory requirements to report financial information accurately and in a timely manner. This proactive engagement ensures that any necessary adjustments are made before the financial statements are finalized and disseminated, thereby protecting stakeholders. Incorrect approaches analysis. One incorrect approach is to proceed with the audit without thoroughly investigating the potential misstatement. This would be a failure to exercise due professional care and could lead to the issuance of an inaccurate audit report, violating auditing standards and potentially misleading stakeholders. It also disregards the finance director's concern, which, if valid, could represent a material misstatement. Another incorrect approach is to agree to the finance director's request to delay the audit indefinitely, without a clear plan or justification. This could be seen as complicity in delaying the reporting of potentially inaccurate financial information, which is a breach of regulatory requirements and ethical principles of independence and objectivity. It also fails to address the underlying issue of the potential misstatement. A third incorrect approach is to immediately issue a qualified audit opinion without sufficient investigation. While addressing the potential misstatement is important, premature qualification without a thorough understanding of its nature, magnitude, and impact would be unprofessional and could unnecessarily damage the company's reputation. The focus should be on resolving the issue first. Professional reasoning. Professionals facing such a situation should follow a structured decision-making process, First, they must identify the core issue, a potential misstatement impacting financial reporting. Second, they should assess the urgency and materiality of the issue. Third, they must consult relevant professional standards and regulatory requirements concerning financial reporting and auditing. Fourth, they should engage in open and transparent communication with all relevant parties, including management, the audit committee, and potentially legal counsel, to understand the situation fully and explore potential solutions. Finally, they must act with integrity and objectivity, prioritizing the accuracy and reliability of financial information and adhering to all applicable regulations. Question 12. The control framework reveals that a significant volume of sales transaction data requires processing. To ensure accuracy and efficiency, a new automated reconciliation tool has been implemented. However, the team is considering how best to integrate this tool into the existing data validation process to maintain the highest standards of data integrity. Which of the following approaches best aligns with robust internal control principles and best practices for data validation within a company like Associated British Foods? Option A. Integrate the automated tool for initial checks, but allow the processing team to perform ad hoc manual checks as they deem necessary, without formal documentation. Option B. Have the same individual who performed the initial data entry also conduct the manual review of the automated tool's output. Option C. Rely solely on the automated tool for all data validation, assuming its algorithms are sufficiently advanced to catch all potential errors. Option D. Implement the automated tool to perform all initial checks, followed by a targeted manual review of any flagged discrepancies by a separate, designated team member. The correct answer is D. Implement the automated tool to perform all initial checks, followed by a targeted manual review of any flagged discrepancies by a separate, designated team member. Explanation: this scenario presents a professional challenge because it requires balancing the need for efficient data processing with the imperative to maintain data integrity and comply with internal control policies. The challenge lies in identifying a method that is both effective for the task and adheres to established best practices for data handling within a regulated environment like Associated British Foods. Careful judgment is required to avoid shortcuts that could compromise accuracy or lead to regulatory breaches. The correct approach represents best professional practice because it prioritizes a systematic and documented method for data validation. By employing a multi-stage review process that includes automated checks and manual verification by a designated individual, it ensures that potential errors are identified and rectified before the data is finalized. This aligns with the principles of robust internal controls, which are fundamental to maintaining the reliability of financial reporting and operational data. As expected within a company of Associated British Foods stature and regulatory obligations, this methodical approach minimizes the risk of downstream issues arising from inaccurate data. An incorrect approach that relies solely on automated checks without manual oversight fails to account for the limitations of algorithms, which may not detect all anomalies or contextual errors. This poses a regulatory risk by potentially allowing inaccurate data to enter critical systems, which could lead to misstatements in financial reports or flawed business decisions. Another incorrect approach that involves manual review by the same individual who performed the initial data entry creates a conflict of interest and increases the likelihood of overlooking errors due to familiarity or confirmation bias. This undermines the principle of segregation of duties, a key element of effective internal control, and increases the risk of undetected errors. A third incorrect approach that bypasses formal validation procedures in favor of ad hoc checks introduces inconsistency and a lack of accountability, making it difficult to trace the origin of errors or demonstrate due diligence. This can lead to a breakdown in the control environment and potential noncompliance with internal policies and external regulations. Professionals should adopt a decision-making framework that begins with understanding the specific data being handled and its intended use. This should be followed by an assessment of the inherent risks associated with that data and the potential consequences of errors. Based on this risk assessment, professionals should then select or design control procedures that are proportionate to the risk, ensuring they are documented, consistently applied, and subject to periodic review. The principle of segregation of duties and the importance of independent verification should be central to this process. Question 13. The risk matrix shows a significant number of high likelihood, high impact risks associated with the proposed expansion into a new market. However, this expansion is also identified as a key strategic objective for achieving substantial revenue growth over the next 5 years. Considering the company's stated risk appetite, which generally favors calculated risks for strategic advancement, what is the most appropriate course of action? Option A. Halt the expansion due to the presence of high likelihood, high impact risks, prioritizing the avoidance of potential negative outcomes above all else. Option B. Delegate the decision to a lower management level, as the complexity of balancing strategic growth with significant risks is beyond the scope of this assessment. Option C. Proceed with the expansion, but defer the implementation of mitigation strategies for the high likelihood, high impact risks until after initial market entry to conserve resources. Option D. Proceed with the expansion, implementing robust, predefined mitigation strategies for the identified high likelihood, high impact risks, and establishing a continuous monitoring and review process. Correct answer is D. Proceed with the expansion, implementing robust, predefined mitigation strategies for the identified high likelihood, high impact risks, and establishing a continuous monitoring and review process. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires an individual to interpret a risk matrix, a common tool in risk management, and then apply that interpretation to a practical business decision within the context of Associated British Foods' operational environment. The challenge lies in moving beyond a purely quantitative assessment of risk to a qualitative judgment that considers the strategic implications and the company's risk appetite, all while adhering to regulatory expectations for robust risk governance. The need to balance potential financial gains against identified risks and to justify the chosen course of action demands careful consideration and a structured approach. Correct approach analysis. The correct approach involves a comprehensive review of the risk matrix alongside the company's stated risk appetite and strategic objectives. This demonstrates best professional practice by ensuring that any decision is not made in isolation, but is aligned with the overarching governance framework and the board's tolerance for risk. It requires understanding that a high likelihood and high impact risk, while undesirable, might be acceptable if it aligns with strategic goals and is accompanied by well-defined mitigation strategies. This approach is ethically sound as it prioritizes informed decision-making and responsible stewardship of company resources, aligning with principles of good corporate governance expected within the UK regulatory environment, such as those promoted by the Financial Reporting Council, FRC, in their guidance on risk management and internal control. Incorrect approaches analysis. One incorrect approach would be to solely focus on the highest rated risks without considering their strategic relevance or the potential rewards. This fails to acknowledge that not all high risks are equal in their impact on strategic objectives, and some may be necessary to pursue growth. This approach could lead to missed opportunities and an overly conservative stance, potentially hindering innovation and competitive advantage, which is not in line with a dynamic business environment. Another incorrect approach would be to disregard risks with moderate likelihood and impact, assuming they are manageable without further scrutiny. This overlooks the cumulative effect of multiple moderate risks, which can collectively pose a significant threat. It also fails to demonstrate due diligence and proactive risk management, potentially leading to unforeseen operational disruptions or financial losses, which would be a failure in adhering to the principles of prudent risk management expected under UK company law and corporate governance codes. A third incorrect approach would be to prioritize immediate cost savings over long-term risk mitigation. While cost efficiency is important, neglecting to address identified risks, even if mitigation incurs upfront costs, can lead to far greater expenses down the line due to incidents, regulatory fines, or reputational damage. This demonstrates a short-sighted perspective and a failure to consider the full spectrum of risk-adjusted returns, which is a fundamental aspect of responsible financial management and governance. Professional reasoning. Professionals should approach such scenarios by first understanding the context of the risk matrix within the company's overall risk management framework. This involves clearly defining the company's risk appetite and tolerance levels. The next step is to critically evaluate each identified risk, not just by its rating, but by its potential impact on strategic objectives, financial performance, and reputation. This evaluation should then be combined with an assessment of potential mitigation strategies, their costs, and their effectiveness. The final decision should be a reasoned judgment that balances risk and reward, ensuring alignment with the company's strategic direction and regulatory obligations. This structured, analytical, and context-aware approach ensures that decisions are robust, defensible, and contribute to the long-term success and sustainability of the organization. Question 14. Quality control measures reveal a significant discrepancy between the physical count of a key raw material and its recorded balance in the inventory management system. The discrepancy has been noted for the past 3 stock takes, with no clear explanation. What is the most appropriate immediate course of action for the inventory management team? Option A. Immediately adjust the inventory records to match the physical count to ensure financial reporting accuracy for the current period. Option B. Classify the discrepancy as a minor operational anomaly and focus on the next scheduled stock take, assuming it will resolve itself. Option C. Report the discrepancy to the head of operations and await their instructions on how to proceed. Option D. Initiate a detailed investigation to identify the root cause of the recurring discrepancy, involving cross-functional teams if necessary, and document all findings and proposed solutions before implementing any adjustments. The correct answer is D. Initiate a detailed investigation to identify the root cause of the recurring discrepancy, involving cross-functional teams if necessary, and document all findings and proposed solutions before implementing any adjustments. Explanation. Scenario analysis. This scenario presents a challenge in balancing efficiency with thoroughness in a critical business process. The pressure to quickly address a quality issue, coupled with the need to maintain accurate financial records, requires careful judgment. A rushed or incomplete investigation could lead to misstated financial information, impacting stakeholder confidence, and potentially leading to regulatory scrutiny. The interconnectedness of operational data with financial reporting necessitates a systematic and well-documented approach. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing a comprehensive root cause analysis before implementing corrective actions. This aligns with principles of good corporate governance and financial reporting integrity, which are implicitly expected within the UK regulatory framework governing businesses like Associated British Foods. By thoroughly investigating the cause of the discrepancy, the company ensures that the corrective actions are targeted and effective, preventing recurrence and maintaining the accuracy of financial statements. This methodical approach also supports robust internal controls, a key requirement under UK company law and financial reporting standards. Incorrect approaches analysis. One incorrect approach involves immediately adjusting inventory records without understanding the cause of the discrepancy. This is a regulatory failure because it bypasses essential internal control procedures designed to ensure the accuracy and reliability of financial information. It could lead to the masking of underlying operational issues or even fraud, violating the duty of directors to maintain proper accounting records and present a true and fair view of the company's financial position. Ethically, it represents a lack of due diligence and a potential attempt to present a misleading financial picture. Another incorrect approach is to escalate the issue to senior management without any initial investigation. This demonstrates a failure to exercise professional judgment and a lack of initiative in problem solving. While escalation is sometimes necessary, doing so prematurely without gathering basic facts can overburden senior management with operational details and delay the resolution of the issue. It also fails to uphold the principle of accountability within the organization, where individuals are expected to investigate and resolve issues within their purview first. A third incorrect approach is to dismiss the discrepancy as a minor operational error without further investigation. This is a significant ethical and potential regulatory failure. Even minor discrepancies, if systemic, can indicate weaknesses in internal controls that could lead to larger financial misstatements or losses. It shows a disregard for the importance of accurate record keeping and a lack of commitment to maintaining the integrity of financial data, which is a cornerstone of responsible business conduct in the UK. Professional reasoning. Professionals facing such situations should adopt a structured problem-solving framework. This typically involves 1. Acknowledging and documenting the issue, 2. Gathering initial facts and data, 3. Conducting a thorough root cause analysis, 4. Developing and implementing appropriate corrective and preventative actions. 5. Verifying the effectiveness of the implemented actions. 6. Documenting the entire process for audit and review purposes. This systematic approach ensures that issues are addressed comprehensively, controls are strengthened, and financial reporting remains accurate and reliable, thereby upholding professional integrity and regulatory compliance. Question 15. The evaluation methodology shows a tendency to rely on informal observations and comparisons between team members rather than a structured assessment against predefined key performance indicators when determining employee performance for the upcoming annual review cycle. Option A. Continue with the current informal observation and comparison method, as it allows for a more holistic understanding of an employee's contribution to team dynamics and overall morale. Option B. Implement a standardized performance review process that clearly defines objective performance metrics for each role, requires documented evidence to support ratings, and includes a calibration session for managers to ensure consistency in evaluations across departments. Option C. Focus the evaluation primarily on an employee's length of service and demonstrated loyalty to the company, as these are strong indicators of overall value and commitment. Option D. Encourage managers to use their best judgment and intuition to assess employees, prioritizing those who are most vocal and proactive in expressing their opinions during team meetings. The correct answer is B. Implement a standardized performance review process that clearly defines objective performance metrics for each role, requires documented evidence to support ratings, and includes a calibration session for managers to ensure consistency in evaluations across departments. Explanation. This scenario presents a professional challenge in ensuring that performance evaluations are conducted fairly and objectively, aligning with Associated British Foods' commitment to ethical employment practices and regulatory compliance. The core difficulty lies in balancing the need for a structured evaluation process with the potential for unconscious bias to influence subjective assessments, particularly when dealing with a diverse workforce. Adhering to best practices is crucial to prevent discrimination claims and maintain employee morale. The correct approach represents best professional practice because it emphasizes the use of objective, measurable criteria and multiple data points for evaluation. This method minimizes the impact of individual biases by requiring evaluators to justify their assessments with concrete evidence of performance against defined standards. This aligns with general principles of fair employment and the implied duty of care employers have towards their staff, ensuring that decisions regarding progression, remuneration, and development are based on merit and demonstrable contribution. It fosters transparency and provides employees with clear feedback for improvement. An incorrect approach that relies solely on anecdotal evidence or personal impressions fails to meet professional standards. This can lead to discriminatory outcomes, as subjective feelings can be influenced by unconscious biases related to protected characteristics. Such an approach is ethically unsound as it deviates from the principle of equal opportunity and can violate employment law by creating a hostile or unfair working environment. Another incorrect approach that focuses on comparing employees against each other without reference to objective performance standards can foster unhealthy competition and resentment. This method is problematic because it can penalize high performers if the overall team performance is low, or conversely, reward mediocrity if the team is generally underperforming. It lacks a clear link to individual contribution and can be perceived as arbitrary, leading to demotivation and potential grievances. A further incorrect approach that prioritizes seniority or tenure over actual performance is also professionally unacceptable. While experience is valuable, it should not be the sole determinant of performance evaluation. This can lead to the stagnation of talent, as more capable but less senior employees may be overlooked. Ethically, it undermines the principle of meritocracy and can lead to a workforce where competence is not adequately recognized or rewarded, potentially impacting productivity and innovation. The professional decision-making process for similar situations should involve a commitment to a robust, evidence-based evaluation system. This includes defining clear performance objectives, providing regular feedback, training evaluators on bias awareness, and implementing a multi-rater feedback mechanism where appropriate. When faced with subjective elements, professionals should always seek corroborating evidence and ensure that any judgments are defensible and aligned with established company policies and legal requirements. Question 16. Market research demonstrates a significant shift in consumer preferences towards healthier, plant-based food options, presenting a potential growth area for Associated British Foods. Considering this, which of the following represents the most professionally sound approach to evaluating this market trend? Option A. Outsource the development of plant-based products to a third-party supplier to minimize internal risk and investment. Option B. Immediately invest heavily in developing and launching a new range of plant-based products, leveraging existing distribution channels. Option C. Continue to focus on existing product lines, as the company has a strong track record and established market position in its current offerings. Option D. Conduct a comprehensive feasibility study to assess the market demand, competitive landscape, internal capabilities, and potential financial returns before committing significant resources. The correct answer is B. Immediately invest heavily in developing and launching a new range of plant-based products, leveraging existing distribution channels. Explanation. Scenario analysis. This scenario presents a common challenge in business operations, where a company must decide how to respond to evolving market demands and competitive pressures. The core difficulty lies in balancing the need for innovation and market responsiveness with the potential risks associated with significant strategic shifts, such as investing in new product lines or markets. A hasty or ill-informed decision could lead to wasted resources, damage to brand reputation, or missed opportunities. Therefore, a rigorous and systematic approach to evaluating potential strategies is paramount. Correct approach analysis. The correct approach involves a comprehensive and data-driven evaluation of market research findings. This includes a thorough analysis of customer needs, competitor activities, and emerging trends. It necessitates a clear understanding of the company's existing capabilities, resources, and strategic objectives. By developing multiple strategic options and rigorously assessing their feasibility, potential return on investment, and alignment with the company's long-term vision, a well-informed decision can be made. This aligns with best professional practice by ensuring that strategic choices are grounded in evidence, mitigate risks, and are designed to achieve sustainable growth and competitive advantage. It reflects a commitment to responsible business conduct and strategic foresight, which are implicitly expected within the regulatory and ethical frameworks governing corporate decision-making in the UK. Incorrect approaches analysis. One incorrect approach is to immediately adopt the most popular or seemingly innovative strategy without sufficient due diligence. This fails to consider the specific context of Associated British Foods, its existing strengths, and the potential downsides of the proposed strategy. It could lead to misallocation of resources and a failure to achieve desired outcomes, potentially contravening principles of good governance and fiduciary duty to shareholders. Another incorrect approach is to dismiss new market opportunities based on a reluctance to deviate from established practices. While stability is important, an overly conservative stance can lead to a loss of market share and competitive relevance. This approach neglects the dynamic nature of markets and the need for adaptation, which could be seen as a failure in strategic management and a potential breach of the duty to act in the best interests of the company. A third incorrect approach is to prioritize short-term gains over long-term sustainability. While immediate profitability is a consideration, a strategy that sacrifices future growth or brand integrity for quick wins is not professionally sound. This can lead to reputational damage and long-term financial instability, which is contrary to the principles of responsible corporate citizenship and sustainable business practices expected under UK regulations. Professional reasoning. Professionals should approach strategic decisions by first establishing a clear understanding of the problem or opportunity. This involves gathering and critically evaluating relevant data, including market research, financial projections, and internal capabilities. Next, they should brainstorm and develop a range of potential solutions or strategies. Each option should then be assessed against predefined criteria, such as financial viability, strategic fit, risk assessment, and ethical considerations. The decision-making process should be transparent, documented, and involve relevant stakeholders. Finally, the chosen strategy should be implemented with clear objectives, performance metrics, and a plan for ongoing monitoring and adaptation. This structured approach ensures that decisions are rational, defensible, and aligned with the company's overall objectives and regulatory obligations. Question 17. The performance metrics show a significant increase in customer data processing times since the implementation of the new data handling policy. Which of the following actions best addresses this situation while upholding Associated British Foods' commitment to regulatory compliance and data security under UK law? Option A. Immediately revert to the previous data handling procedures to restore processing efficiency and revisit the new policy at a later, unspecified date. Option B. Conduct a thorough review of the new policy's implementation, identifying specific procedural bottlenecks or training gaps, and provide targeted support and supplementary training to address these issues, potentially with a phased adjustment to certain workflow elements that do not compromise core security. Option C. Continue with the new policy as is, without any further investigation or adjustments, and focus solely on other business priorities, assuming the performance dip is an unavoidable consequence of enhanced security. Option D. Enforce the new policy rigidly without further investigation or support, assuming employees will adapt over time, and dismiss the performance metrics as a temporary anomaly. The correct answer is B. Conduct a thorough review of the new policy's implementation, identifying specific procedural bottlenecks or training gaps, and provide targeted support and supplementary training to address these issues, potentially with a phased adjustment to certain workflow elements that do not compromise core security. Explanation. Scenario analysis. This scenario presents a challenge in implementing a new compliance policy within Associated British Foods, specifically concerning the handling of sensitive customer data. The difficulty lies in balancing the need for robust data protection, as mandated by UK data protection laws, e.g. the Data Protection Act 2018 and UK GDPR, with the practicalities of operational efficiency and employee adoption. The performance metrics indicating a dip in processing times suggest that the new policy, while intended to enhance security, might be creating unforeseen bottlenecks or requiring a learning curve for staff. Professionals must navigate this by ensuring compliance without unduly hindering business operations or alienating employees. Correct approach analysis. The correct approach involves a phased rollout of the new data handling policy, coupled with comprehensive training and ongoing support. This aligns with best practices for change management and regulatory compliance. Specifically, under UK GDPR and the Data Protection Act 2018, organizations have a responsibility to implement appropriate technical and organizational measures to ensure data security and integrity. A phased approach allows for controlled implementation, identification and resolution of issues in a limited scope before wider deployment, minimizing disruption. Providing thorough training ensures employees understand the rationale behind the policy, the specific procedures, and their legal obligations, thereby fostering a culture of compliance. Ongoing support, including clear channels for questions and feedback, is crucial for addressing emerging challenges and reinforcing correct practices. This proactive and supportive strategy not only ensures adherence to legal requirements, but also promotes a more effective and sustainable compliance framework. Incorrect approaches analysis. One incorrect approach would be to immediately revert to the old, less secure data handling procedures to regain processing speed. This would represent a direct violation of UK data protection principles, particularly the principle of integrity and confidentiality Article 5(1)(f) of UK GDPR, and could expose the company to significant regulatory penalties from the Information Commissioner's Office (ICO), reputational damage, and loss of customer trust. It demonstrates a failure to prioritize data security and a lack of commitment to regulatory obligations. Another incorrect approach would be to enforce the new policy strictly without providing adequate training or support, expecting immediate adherence despite the observed performance dip. This approach, while seemingly focused on compliance, fails to acknowledge the practical implementation challenges. It can lead to errors, workarounds, and a perception of the policy as an impediment rather than a necessary safeguard. Ethically, it neglects the responsibility to equip employees with the knowledge and tools to comply effectively, potentially leading to unintentional breaches. Legally, while the policy itself might be compliant, its flawed implementation could still result in non-compliance due to human error or lack of understanding, attracting regulatory scrutiny. A third incorrect approach would be to ignore the performance metrics altogether and continue with the new policy without any adjustments or further investigation. This demonstrates a lack of responsiveness to operational realities and employee feedback. While the policy might be legally sound, ignoring its impact on efficiency could lead to decreased productivity, employee frustration, and potentially a subtle erosion of compliance as staff seek to circumvent perceived inefficiencies. This passive stance fails to uphold the principle of accountability under UK GDPR, which requires organizations to be able to demonstrate compliance. Professional reasoning. Professionals faced with this situation should adopt a structured problem-solving approach. First, they must acknowledge the dual objectives, maintaining regulatory compliance and ensuring operational efficiency. The initial step should be to thoroughly investigate the root cause of the performance dip, gathering feedback from the teams directly affected by the new policy. This investigation should be conducted with a view to identifying specific procedural issues or training gaps rather than questioning the policy's necessity. Based on this analysis, a plan for refinement should be developed. This might involve clarifying procedures, providing targeted supplementary training, or making minor adjustments to workflows that do not compromise the core security objectives of the policy. Throughout this process, clear communication with all stakeholders, including senior management and affected employees, is paramount. The decision-making framework should prioritize a risk-based approach, ensuring that any adjustments made do not introduce new data protection vulnerabilities. The ultimate goal is to achieve a state where compliance is seamlessly integrated into daily operations, supported by a well-informed and empowered workforce. Question 18. The efficiency study reveals that the current manual data reconciliation process for inventory valuation is time-consuming and prone to human error. Management is keen to implement an automated system to streamline this process and reduce associated costs. However, the proposed automated system requires significant integration with existing financial reporting software, and the vendor's proposed implementation timeline is aggressive, offering limited opportunity for extensive parallel testing before go-live. Which of the following implementation strategies best balances the need for efficiency with the imperative for regulatory compliance and data integrity? Option A. Prioritize a phased implementation of the automated system, starting with a pilot group or a subset of inventory categories, allowing for thorough testing, validation, and user training before a full rollout. Option B. Proceed with the automated system implementation as planned by the vendor, assuming the vendor's testing is sufficient and relying on existing internal controls to catch any discrepancies. Option C. Delay the implementation of the automated system indefinitely until a more robust and less time-constrained integration solution can be developed, even if it means foregoing immediate efficiency gains. Option D. Implement the automated system with minimal parallel testing, focusing on post-implementation monitoring and rapid issue resolution to achieve cost savings quickly. The correct answer is D. Implement the automated system with minimal parallel testing, focusing on post-implementation monitoring and rapid issue resolution to achieve cost savings quickly. Explanation. This scenario presents a professional challenge because it requires balancing the drive for operational efficiency with the imperative to maintain robust internal controls and compliance with regulatory expectations, particularly concerning data integrity and reporting accuracy. The pressure to demonstrate immediate cost savings can lead to shortcuts that undermine these critical functions. Careful judgment is needed to identify solutions that achieve efficiency without compromising compliance or introducing undue risk. The correct approach represents best professional practice because it prioritizes a thorough, phased implementation that includes rigorous testing and validation of any new system or process. This aligns with the principles of good corporate governance and regulatory compliance, which demand that changes are implemented in a controlled manner to prevent errors, fraud, or misrepresentation of financial or operational data. Specifically, it adheres to the spirit of regulations that require accurate record-keeping and reliable reporting, ensuring that any efficiency gains are based on sound data and processes. This methodical approach minimizes the risk of regulatory breaches and reputational damage. An incorrect approach that focuses solely on rapid deployment without adequate testing or validation would represent a significant regulatory and ethical failure. Such an approach could lead to the introduction of systemic errors in data processing or reporting, potentially resulting in non-compliance with financial reporting standards or other applicable regulations. This could expose the company to fines, sanctions, and loss of stakeholder trust. Another incorrect approach that involves bypassing established internal control procedures, even if seemingly to speed up implementation, would be a direct contravention of good governance principles and likely violate internal policies designed to prevent fraud and error. This demonstrates a disregard for the established framework of checks and balances essential for maintaining business integrity. A third incorrect approach that prioritizes cost reduction over the necessary investment in training and support for new systems would also be professionally unacceptable. This failure to adequately equip staff to use new processes correctly can lead to widespread errors and inefficiencies, ironically negating the intended benefits and potentially creating new compliance risks. The professional reasoning process for similar situations should involve a risk-based assessment of any proposed efficiency initiative. This includes identifying potential compliance, operational, and financial risks associated with different implementation strategies. Stakeholder consultation, including with compliance, internal audit, and relevant operational teams, is crucial to ensure all perspectives and potential impacts are considered. A phased approach with clear go/no-go decision points based on successful testing and validation is generally advisable. Furthermore, professionals should always consider the long-term implications of their decisions, ensuring that short-term gains do not create long-term compliance liabilities or operational weaknesses. Question 19. The monitoring system demonstrates the collection of employee keystroke data and website browsing history. While the company states this is for performance evaluation and security threat detection, the extent of data captured appears to exceed what is strictly necessary for these stated purposes, and employee awareness of this specific level of detail is unclear. Which of the following represents the most appropriate immediate next step for the company to ensure compliance with data protection regulations? Option A. Immediately disable all employee monitoring features to avoid any potential regulatory breaches while a review is conducted. Option B. Rely on the existing general employee privacy policy, assuming it covers such monitoring activities, and continue data collection as normal. Option C. Conduct a comprehensive data protection impact assessment (DPIA) to evaluate the necessity, proportionality, and lawfulness of the keystroke and browsing history collection, and to identify and mitigate any associated risks to employee privacy. Option D. Inform employees that their keystroke and browsing data is being collected for performance and security, without further explanation or assessment of necessity. Correct answer is C. Conduct a comprehensive data protection impact assessment (DPIA) to evaluate the necessity, proportionality, and lawfulness of the keystroke and browsing history collection, and to identify and mitigate any associated risks to employee privacy. Explanation. The monitoring system demonstrates a potential breach of data privacy regulations, specifically concerning the handling of employee personal information. The challenge lies in balancing the company's legitimate need for operational oversight with the legal and ethical obligations to protect employee data. This requires a nuanced understanding of data protection principles, consent mechanisms, and the proportionality of data collection. The correct approach involves a thorough review of the data collected against the company's stated purposes for monitoring, ensuring that only necessary data is processed and that employees have been adequately informed and have provided valid consent where required. This aligns with the principles of data minimization, purpose limitation, and transparency mandated by data protection laws. Best professional practice dictates a proactive approach to compliance involving regular audits, clear data processing policies, and robust consent management. An incorrect approach of continuing the current monitoring without further investigation would be a direct violation of data protection principles. It fails to address the potential overcollection or misuse of personal data, thereby breaching the duty of care owed to employees and potentially leading to significant regulatory penalties and reputational damage. Another incorrect approach, that of immediately ceasing all monitoring without assessing its necessity or legality, is also professionally unsound. While it might seem like a safe option, it could disrupt legitimate business operations and fail to address any underlying compliance gaps that might still exist if monitoring is partially or wholly justifiable. It lacks a reasoned, evidence-based decision-making process. A third incorrect approach, that of relying solely on existing, potentially outdated privacy policies without verifying their current applicability or employee awareness, is a failure of due diligence. Policies must be actively communicated and demonstrably understood by employees to be effective. Without this, the company cannot demonstrate lawful processing. The professional decision-making process for similar situations should involve 1. Identifying the potential issue and its regulatory context. 2. Gathering all relevant facts, including the nature of the data collected, the purposes of collection, and existing policies. 3. Assessing the legality and proportionality of the current practices against applicable regulations. 4. Consulting with legal and compliance experts. 5. Developing and implementing a remediation plan that ensures compliance and protects individual rights. 6. Documenting the entire process and decision-making. Question 20. Stakeholder feedback indicates that a key financial reporting process, which is subject to UK accounting standards and company law disclosure requirements, is perceived as overly resource-intensive and could potentially be streamlined to reduce operational costs. What is the most professionally responsible approach to address this feedback? Option A. Initiate a comprehensive review of the process, involving relevant departments such as finance, compliance, and internal audit to identify specific areas for improvement, assess potential risks to accuracy and regulatory adherence, and develop data-driven recommendations for streamlining. Option B. Delegate the task of streamlining the process to the most junior members of the finance team, with the instruction to reduce the time spent on each step by at least 30% to achieve cost savings. Option C. Immediately implement a simplified version of the process that significantly reduces the number of checks and balances, based on the assumption that the current process is unnecessarily bureaucratic and that cost savings are the primary objective. Option D. Proceed with a significant reduction in the resources allocated to the process, focusing solely on the financial savings, and address any compliance issues that may arise retrospectively. The correct answer is A. Initiate a comprehensive review of the process, involving relevant departments such as finance, compliance, and internal audit, to identify specific areas for improvement, assess potential risks to accuracy and regulatory adherence, and develop data-driven recommendations for streamlining. Explanation. This scenario presents a professional challenge due to the inherent conflict between immediate cost-saving pressures and the long-term strategic imperative of maintaining robust internal controls and compliance. The company is facing a situation where a critical business process, essential for regulatory adherence and operational integrity, is identified as potentially inefficient. The challenge lies in balancing the desire for cost reduction with the non-negotiable requirements of regulatory compliance and the potential risks associated with cutting corners. Careful judgment is required to ensure that any proposed changes do not inadvertently create compliance gaps or expose the company to legal or reputational damage. The correct approach represents best professional practice because it prioritizes a thorough, data-driven assessment of the process and its associated risks before implementing any changes. This aligns with the principles of good governance and responsible business conduct, which are implicitly expected within the UK regulatory framework governing financial services and corporate operations. Specifically, it upholds the duty of care and the need for due diligence in managing business processes. By involving relevant stakeholders, including compliance and internal audit, it ensures that potential regulatory implications are identified and addressed proactively. This approach fosters a culture of compliance and risk management, safeguarding the company's integrity and its ability to operate within legal boundaries. An incorrect approach that focuses solely on immediate cost reduction without a comprehensive risk assessment would be professionally unacceptable. This would represent a failure to exercise due diligence and a potential breach of the duty to manage the business effectively and in accordance with regulatory expectations. Such an approach could lead to the implementation of changes that, while seemingly cost-saving, undermine essential controls, increase the risk of non-compliance with regulations such as those overseen by the Financial Conduct Authority, FCA, or company law, and expose the company to significant fines, sanctions, or reputational damage. Another incorrect approach that involves bypassing established internal control procedures or seeking to expedite changes without proper authorization or review would also be professionally unacceptable. This demonstrates a disregard for established governance structures and internal policies designed to ensure accuracy, integrity, and compliance. It could lead to errors, omissions, or the implementation of non-compliant processes, creating a direct risk of regulatory breaches and potential disciplinary action. The professional decision-making process for similar situations should involve a structured risk-based approach. First, clearly define the problem or the area for improvement, as indicated by stakeholder feedback. Second, gather comprehensive data and evidence to understand the current process, its costs, and its effectiveness. Third, identify and assess potential risks, particularly those related to regulatory compliance, operational efficiency, and data integrity. Fourth, develop and evaluate potential solutions, considering their impact on costs, efficiency, and risk. Fifth, consult with relevant internal departments such as compliance, legal, and internal audit to ensure all perspectives and regulatory requirements are considered. Finally, implement the chosen solution with appropriate oversight and monitoring to ensure it meets objectives and remains compliant.